Good morning, everyone, and welcome to Lend ED. It's really exciting for us today to be able to welcome back to Lend ED our partners at Capify. And today we're actually going to be, we've got the dynamic duo joining us this morning, and they're going to be talking to us today about what's really driving small business and where Capify can actually help your clients. So Millard and Daniel will be running through a presentation with you this morning, and then as per usual, we love to put our lenders under the spotlight. So please ensure that you send through your questions for the Q&A at the end. But to start with, let's welcome Millard and Daniel from Capify. Welcome, men.
Thank you, Danelle.
Thanks for having us.
Hey, now you guys can turn your camera on because we all want to see you.
Appreciate it. Can you see us now?
We sure can.
Awesome.
Look, we look like we've got all of the attendees in that have actually RSVP'd, so that is wonderful. So I'm going to hand over to you and I'm going to leave our attendees in your very capable hands. But please, guys, really super important, make sure you hit us up with all of the questions that you may have for Millard and Daniel ready for the end of the session. But otherwise, I'm going to leave you in their capable hands and you can listen to them and not me. And please enjoy hearing the latest updates from our partners at Capify.
Thank you, Danelle. Thank you. All right. Everyone can see?
We can see the presentation perfectly. So I'll mute now and leave it with you.
Awesome. Thank you, Danelle. I really appreciate that. All righty. So just want to thank Lend as well for having us on. It's always welcoming for us to be able to, share where we're at, where we want to be, and, a few of the exciting stuff that's happening at Capify. So obviously, Millard and Daniel as our BDM. So we're very excited to share exactly what's happening with Capify in 2021 and in the future. So Daniel, what's driving demand for small business?
All right. So what we've seen, firstly, thank you for everyone for joining us this morning. So in regards to what's driving small business lending, especially in our space, I mean, with COVID, everyone's found it difficult over the last year or so, not just small businesses, but particularly them, due to lockdowns, and people have had to deal with these situations. Some small businesses didn't have the infrastructure or the websites to continue trading during these difficult times. Fortunately, here in Australia, we have seen obviously cases fall over the last 6 months, and due to that as well, people are working again from the office and operating with some sort of normality, I would like to say. There is obviously consumer confidence again within the market, not to mention with house prices, for example, increasing. So people are confident that the economy is slowly coming back. Obviously, we have a long way to go to be back to normal, to where we were, but with unemployment figures falling down to 5.8% in February, people are optimistic, and with consumer confidence, they are spending money again. They are visiting their small businesses and obviously putting that money back into the economy. So that's a big positive. I'm sure everyone's aware that JobKeeper finished up on the 28th of March. And, it was a great incentive for businesses to be able to, pay their staff over the COVID period. I'm sure everyone's aware, obviously, the government SME scheme continues with their loans, albeit it is a little bit different. But what I understand, it's more for top tier clients and perhaps clients that already have relationships with banks as well. Now, with our clients and what we've seen, particularly in the market as well, clients have found it difficult to access funds from the banks. Not to say they don't, but, this is why we exist, within the unsecured space. Our clients like to see, firstly, their funds come quickly. They don't want to provide too many docs, preferably unsecured, of course. They might not be even trading long enough to be eligible to get, the bank loans, for example. So this is why we exist, and also with credit history as well, we take that on board. Now, with the media, I'm sure everyone's seen, based on surveys that have been completed all around with small business owners, they are confident that they'll see some sort of normality later this year in terms of trading and throughout 2022. And this is what's actually driving them to come to lenders like Capify for funds, because they are looking to revamp, hire, renovate, spend on marketing just to get that interest again and bring people through those doors. So it's very exciting stuff for them. If we look at Capify as well, since September, I'd say we've seen a steady increase month to month from not just clients, but also brokers in terms of, our loans, because there is that, interest again in regards to putting money back into the business, helping them grow. And we're just happy that we're able to assist with these clients and, successful stories at the end of the day too. At the end of the day, it is just the economy, the confidence in the economy that's allowing the small businesses to look at funding and, helping their business come back to where they were before the COVID period. So, very optimistic times, and we're very happy that we're part of that journey as well. Yep. Now, if we look at what our products are at the end of the day, we've got the traditional business loan. I'm sure a lot of brokers are aware of it. Those that aren't, it's pretty straightforward. We don't like to complicate things too much here. It is a short-term unsecured loan. So what that means, it's anywhere between 3 to 12 months, depending on the client and what they need it for. Obviously, it's unsecured, as I mentioned. So we don't, take any caveats. We don't take the property into consideration. There is no PPSR or GSA, which allows brokers, right? So you guys can go maybe look at asset finance, maybe look at invoice factoring as well. It allows you to bring other solutions to the table to your clients, as well as using potentially our products as well. So that's exciting. We keep a minimum paperwork, as I mentioned earlier on. So basically we look at bank statements to assess what we can provide, up to 75,000. Sometimes it is up to 100,000, depending on the right clients. But if they are after more funds than that, we do look at financials. But again, this is just documents they would probably have on hand as it is anyways. Quick same-day approvals. So we work with, brokers all the time. If they want us to do the deal quickly, we do. We work, just to make sure the experience is the best for the broker and the client. We understand the relationship has to continue there. So if your client doesn't want the money the following day, that's not a problem at all. We can delay it. But again, it's just that communication back and forth. If we need to do it quickly, we will do so. Small daily debits. So in regards to us, we do provide small repayments, and they are daily across the term of the loan. Why we do that is because the money that we give to our clients, we want to see them use it for their business and help them grow, and not worry too much about, the repayments for their loans. So we don't want to affect their cash flow in a negative way. This is much more manageable way of repaying the loan. And we've seen that with clients, especially that deal with Capify day to day. Now, in regards to the amount that we can provide, it's anywhere between $5,000 to $350,000. And again, it just depends on what the client's after, what they need the money for, how much they need it. We're willing to work with them to find the best solution at the end of the day. Also to mention, we look at clients that have been trading for the business loan, particularly 6 months or longer. So we're definitely, willing to assist clients that have been, in the space for a short term, as long as the ABN's registered, they've got the bank statements ready as well for us. We do have a dedicated renewals team in-house. They do a fantastic job, but at the end of the day, we don't do anything without communicating first with the broker. So if you guys have clients that already have Capify loans, we'll reach out to you, let you know, look, they're eligible for additional funds if they need it, of course. And then obviously in regards to commission, again, it's your client at the end of the day. We want to make sure it's the best experience for everyone. So yeah, that's positive as well. Now, looking at key triggers, why they choose small business loans and why actual clients come to us all the time was, firstly, we look at expansion, right? So that entails a lot of clients, come to us for that quick approval because they need to buy inventory that they're planning to turn over. We can provide that money. They can go buy that inventory, have it ready, sell it, make their money as well. So that's a biggie. Also equipment, hiring of staff as well, not to mention, and obviously just cash flow in general. They want to make sure, they're covered for the next 6, 12 months, not a problem at all. They'll come to us and we're happy to help them as well. A lot of our clients as well come to us because they might have upcoming contracts and they don't want to lose that. They want to be prepared, be ready to be able to, assist with those contracts. So they'll come to us, use that money to be ready for the beginning of those contracts. So they're not turning away new business. And obviously in turn, this helps them grow and become bigger as well. They might have reached current funding limits, if they're with a bank, for example, or maybe with that invoice factoring, as I mentioned, or maybe an unsecured lender as well. So we're willing to, have a look and see if as long as there's serviceability at the end of the day, we're willing to help out these clients and make sure that, they have the right solution. Again, the point is we don't want to put anyone in financial headaches. So as long as there's serviceability and the solution's right for the client and also the broker, we'll do our very best to meet that. Unable to meet other commitments. Yeah, everyone knows this. ATO debt, they might be behind on payroll, or even slow paying debtors. That's a big one that, clients come to us all the time, and brokers as well. They need that money quickly. They'll reach out to their broker. Hey, I need that finance. Can you organize it for me? So that's a biggie. And also personal funds. We have seen in the past, clients that have used their own personal funds for their business. So a lot of the times I'd like to think that it doesn't actually work out well for them, because, they're using up their own savings when they could have got business finance. This is a business expense at the end of the day. And obviously, using up your personal funds, you want to keep your business and your personal life a little bit separate as well. So those are the key triggers that, the clients come to us on a regular basis, I would like to believe.
So thanks, Danny, for sharing that information. Now, the exciting new product that we have for the brokers, we've named it Wholesale Buy Rates, and pretty much what it is a business loan, but on the broker's terms. Capify has been around for 12 plus years. We're trying our best to stay innovative in the market. We've been listening to brokers, we've been listening to clients through the, direct partners and through the business development side. And, we spoke about this, during COVID, and, we thought, what, it's time to allow brokers to dictate, a little bit more when it comes to the loan. And, there's a few positives when it comes to this product. So, for example, rates starting from 8% simple interest. Now, what this pretty much means is that, it's not offered on, one deal every month, or, every once in a while. These rates and these terms are available on every single product, every single deal, any scenario that's provided. It's an option for the broker to select this if they believe this is what's going to help, their client. So I'll just give you an example. Say your client wants to borrow 100,000. Total payback would start from 108,000. Now, take into mind, we do have a risk-based category system that we take into place. So, for your A+ clients, they'll be looking at a total payback of 108. Now, the broker has the option to charge up to 8% extra, and that would be pretty much the commission that the broker would be taking home. So, so many times in the past, we've had brokers mention to us, look, I don't really care about the comms. I've had this client for, 4 or 5 years. I've done multiple loans with them. They need a quick cash flow fix. And that's where this product works really well for that broker, because if that's what they're wanting, they can charge the client, 110,000 total payback, which means they'll make 2% comms. On the other end, if they'll to charge their client 116,000 in payback, then they'll gain 8% in comms. So we wanted to ensure that, if the market rate of commission was at 4%, that we'll be able to double that. And as mentioned previously, this is on every single deal, every single scenario, if that's what the client and if that's what the broker wants to use. So, and the way we assess the deal is the exact same way we'd assess any business loan. There is going to be times where, the business loan, as how it's running at the moment, would still be preferred. And that would come down to probably category risk for that client. But the positive thing about it is, now the broker is in complete control over the loan and the terms. And that's what we thought would be really helpful, in 2021, what we've seen in the market, what we've seen with COVID. And that's what, we go to the next exciting news. And a lot of you will probably think this is, the merchant cash advance. And in a way it is, but during COVID, we also realized that, businesses like, Menulog, Uber Eats have really transformed the network, and in ways that has helped, people in different ways. I mean, business owners have another option for delivery. Individuals, consumers have another way of receiving meals and receiving, things without having to even leave their doorstep. So what we've done with the merchant cash advance is we've we've tried to evolve it in a way where we can start helping those people that, you know, did struggle during COVID. And how we're doing that is, you know, we're using different technologies to be able to see the amount of deposits via electronic form. So this works in, you know, many different ways. So for example, looking at a scenario, you know, we started off with the bushfires, you know, in late 2019, and then all of a sudden COVID hit, and then the floods. With a merchant, you know, Capify's COVID flexible loan, the beautiful thing about that is we're only taking a percentage of, you know, the sales for that day. So, you know, it allows clients and brokers to look at the, you know, the options in a different variety. So if the client is, you know, weary of a new unsecured loan, you know, they've got the option of taking a loan where if their sales are great for that day, you know, they'll pay back a certain percentage, ranging from 7 to around 16% withheld percentage. So to put that into, you know, just an example, if the client's turnover is $1,000 for that day, you know, depending on where that range is, we'll take anywhere from, you know, 6% to 17%. And the way that brokers can really push this is that, you know, you don't need to worry about the payback on a daily perspective, because you'll only pay back what you can afford, and the terms are flexible. And what that means is it's an estimated time frame that we obviously have our underwriters that will go through and check how long they believe it will take through bank statements for the client to pay it back. But the key difference here is that we can look at providing loans for businesses that have been trading for 3 months. Now, any new restaurant that's been around for 3 months, their sales would look very different from first month to the third month, and then very different on the 6th month. So if they were to take out a small, you know, COVID flexible loan, what they'll realize is if they borrow 20,000 and their sales were to dramatically increase due to, you know, the investment that they're putting into their business, that all of a sudden that they'll be able to pay back that loan quick out of their sales that they're making, and then able to renew if that's what they're wanting to do. So it's just another option for brokers to keep in mind that, you know, Capify have 2 products, and one of them, the business needs to be trading for 6 months. Another one needs to be trading for 3 months. One's a fixed rate and one's a variable rate. So, you know, it's very exciting times, and we're trying to do our absolute best to ensure that, you know, even though businesses did struggle during COVID, that we're not just going to look at that period and think, okay, it's not going well. We'll look back further to see how the business was prior to COVID and how the business is currently in the last 6 months, as things have cleared up a lot during in Australia. So, you know, with consumer confidence increasing, I think this might be a really good option for certain brokers and certain deals. The life cycle of the CCFL in 3 simple steps. So obviously, you know, we'll assess the deal very similarly to the business loan. The funds will be transferred into the account. On a daily perspective, we'll look at the withheld percentage from the FPOS, and that's how they pay back their loan. It's not based on a term. It's an average. It's an average rate. It's an average period that we believe that they'll take to pay back the loan. And the beautiful thing is that, you know, we can renew that client if that's what they're needing at that 60% mark. And that 60% mark is not based on a date. It's based on how quick they can pay it back. And, you know, it's just another option for brokers to consider when they're looking at their loans for their clients.
So just to touch on that as well, after COVID, obviously we reached out to a lot of brokers, had discussions just for feedback as well, because, you know, the dynamic of the industry has changed a lot within the unsecured space, and, you know, all forms of lending and even just day-to-day life, right? So when we received this feedback, we wanted to make sure and ensure that we're doing the right things by the brokers and making their process the best that it can be. We understand at the end of the day, it's, you know, that relationship that the client has with the broker. We want to keep that intact, because the broker could provide many different scenarios, many different solutions. And we want to make sure that if they choose us, we look after everything for you guys and have everyone happy at the end of the day. So the key 3 things that we noticed was communication is a big one, obviously. So with brokers, we like to, you know, provide all the feedback step by step of what's going on with their scenarios and their clients that they've provided to us. We never contact, obviously, the clients without the brokers heads up, and we also don't pull any credit checks on the clients as well, just to ensure that we've actually got the right solution on the table that the broker's happy with firstly, and also the client. So when that's the case, like I said, communication. People want to know where they're up to, how we're reviewing it. So that's why we always, we're a phone call away, basically. So, and we will do our very best to make sure that the communication is there at all times. We also noticed that with compliance, we do have an in-house underwriting team, and they do a fantastic job. Now, it's easier to give clients, all the money in the world that they want, but it's about being responsible at the end of the day, because these loans do have to be repaid, right? So we have an in-house credit team that ensures that we're providing the right solution and the right figures for the client and also the broker that they're happy with. Now, we don't ever want to put a client in a situation where, they'll struggle with their repayments, because, that could tarnish the broker's relationship with that client. So we make sure that the solution that we provide, and we obviously convey this information back to the brokers as well, of why the amount is what it is. And at the end of the day, we'll do our very, very best that we can provide the best solution and make everyone happy around the table as well. So, and the last one is just general support. So with Capify, obviously, we deal with a lot of brokers. Brokers don't just focus on one industry. I find that, they've got their hands in a lot of spaces, which is great. Obviously, you guys are a one-stop shop for clients, and, you guys have that solutions for them as well. Now, what we provide is, for example, I work with, a lot of mortgage brokers, for example, as well. They might not be familiar with unsecured lending. They might not be familiar with what they should be looking out for if their client was to be interested in an unsecured product. So if we have to, provide training to brokers, we will. So anything that we can do to make the broker's life easier, we will. At the end of the day, you guys are our first point of contacts and our customers, and we want to make sure that firstly, you guys are happy, but also your clients. And the best way to do that is making sure the brokers are, transparent with their clients and providing them the right information, right? And also, for example, we've got a marketing team. If we need to do white labeling marketing for brokers just to get that word out, spread it to your clients as well, we'll do so. Like I said, that general support is there. You can give us a call at any time. We're more than willing to, do our very best to make your life easier as well. And in turn, that makes our life easier too. So, it's a win-win for everyone.
Of course. So what do brokers want? Now, we conducted a survey back in November 2020 on what brokers actually wanted. And these are a few of the things that were highlighted. So simplicity, speed, honesty, transparency, tailored service, dedicated BDM, straightforward approach and solutions. Look, at Capify, we're trying to do our absolute best to support that and stay honest to that. So, in simplicity, the documents that we require to start the deal is very straightforward. We're currently also working on, finally releasing a portal for our brokers. Mm-hmm. Now, obviously, the majority of the brokers on Lend will be using that platform, but we're trying our best to accommodate for, in different areas. Now, speed's an interesting one, because at Capify, we try our best to do the best we can for the brokers as quick as possible, but we don't rush the clients, and we don't want to rush the clients. And for majority of our brokers that we deal with, we give them the option from the beginning, which also comes down to tailored servicing. But, if you don't want us to speak to your clients, that's fine. If you want us to speak to your clients, it's also fine. And we're happy to run the deal straightforward with them, or wait for the broker's approval on every area. And that's the reason why, things like even pulling credit score, we don't want to pull credit until we know there's an offer on the table. And the reason for that is because we understand, as mentioned previously, that, the broker could have dealt with this client many times in the past, and we want to keep their relationship flowing. It's also very important to be very transparent on where exactly that deal is up to. And again, that's what we try to stay committed to, because at the end of the day, the brokers are relying on us. They've provided us with a scenario. We're trying our best to get back to them within an hour and a half, with a scenario that's going to, either do what what their client requires, or maybe it's just not the right fit for them. The unsecured lending space is huge. There's different businesses and different lenders that are all doing fantastic jobs, and everyone's got their own little niche. So if the deal doesn't work with us for whatever particular reason, we totally understand that, and we totally understand that there are different options out there. Dedicated BDM is also a very important one. I mean, I think when it comes to service, it's a very important area to focus on. I feel like at times, especially now, it's always about what's the cheapest rate, what's the quickest way things can be done. But the service that takes the process on that is also very, very important. From my view, we're getting a lot of feedback from brokers that, we're very personal, we're able to help them out. We will try to come up with solutions whenever we can. And I think that's very, very important, because when we do speak to the client knows exactly what's happening. The client's very aware of the situation, and we want to stay committed to that. And the last one is solutions. And the way we're tackling that is within the two products that we've mentioned previously. On every single deal that we assess, we look at, what's the best option for that broker and for that deal, for that client. So, we will automatically in the background look if the COVID flexible loan is the better option, or we'll look if the business loan is the better option. So there's certain businesses that, they're doing really well from a terminal perspective. And because of the flexibility in the term structure, we might offer that. Now, we always go out with an email back to the brokers on option A, option B, unless the brokers tell us very clearly, look, this isn't the product for them. We just want this product. So we always try best to find the solution. And sometimes that requires also getting further documents. So, we like to ensure our clients and our brokers that we're always thinking of ways to improve and help them out. And that's the reason why we conducted that survey back in November 2020. So 7 reasons why to use Capify. And I think this is going to be the main thing a lot of the brokers are going to be interested in. So obviously we've mentioned a few of these things, but I'll just go through them again in a little bit more detail. So dedicated team ready to help you and your client. We've got 6 BRM BDMs in place at Capify at the current stage. And the way we're doing things now, we're trying our absolute best to ensure that each broker has a point of contact at all times. Yes, we work from 9 to 5:30, but I'm very confident my guys, whatever time you guys contact them, weekends, 11 o'clock at night, they'll be there, they'll respond as quick as possible. They're not going to submit the deal at that time. That's probably ridiculous to assume and to make anyone believe, but they are going to reply back as quick as I possibly can to ensure that we will look at it as quick as we can, and we'll do everything that we promised within what brokers want. Now, the wholesale buy rates is the first, Capify is done, and we're excited about this product. We've already been using it on a trial sense with a few brokers, and they've absolutely loved the product. And the reason for that is because they're able to dictate the price, and they're able to dictate so much more than they've ever been able to do before. No credit checks to an indicative offer is available. This one's more for the clients. Look, I come from a background of always wanting to find the best possible outcome, best possible deal for myself. So, to put that into a live stream for Capify, it's the same thing. A broker is going to have many options, many lenders on the panel, and they're going to want to select the best possible deal for their client. We totally understand that, and we appreciate that. And that's the reason why we won't run a credit check until the broker allows us to. And what that means is we'll send the broker a conditional on what they're looking at, and option A, option B. And if you're happy to proceed and your client's happy to with the offer, let us know, and we'll run the credit then and there. So, that's a bit of a tailored service that we're happy to provide, and we'll continue to provide. It does slow things down slightly, but for us, again, speed is all about providing the best possible outcome for the broker. We can still get a response out within an hour and a half with this process involved. So it does slow down things from a technical perspective, but at the end of the day, if it allows that broker to then say, this still doesn't fit with Capify, and thank you for not running that credit check, then it's worth it. Credit scores starting from 300 plus. Look, to be completely honest, we did a deal earlier this month where the credit score was 139. It was a trial loan, but it was an option to provide to
another
the client.
Solution. Yeah.
Another solution, exactly. So, we're trying our best to always see all the outcomes on every deal. And, if the credit score is low due to inquiries, due to COVID, we're very flexible at the current stage, because we understand, Australian businesses are struggling at the current stage, and we don't want to be that extra burden when it comes to the credit score. So obviously it's not going to be a premium A client, but we're looking at ways that we can at least offer something. And if it works for the client, the broker, then fantastic. And if not, well, then at least we tried our absolute best, and we can say, it's unfortunate that we can't, provide exactly what they needed. Now, PPSI and GSA, Daniel went over that earlier. it's just another thing for brokers to keep in mind if that's going to help them secure the loan and for future loans as well. Now, total exposure is another one. A lot of brokers have, mentioned that, there's already a few lenders on the loan. So Capify during COVID came up with the thought of, let's see how we can support these businesses and stack if we can. And what I mean by if we can is if serviceability is there and we can follow the responsible guidelines that we have, we're happy to provide the loan on the second, third, fourth loan. It doesn't matter where it's at, as long as they can afford it. And that's very important to understand the affordability part, because again, it is a period where businesses are struggling. We don't want to just provide funds and hurt that business and, at the same time hurt Capify by not receiving those funds back. And then at the same time, the client being stressed and, why'd you provide us with a loan if you knew we couldn't afford it? So we're doing our absolute best there to accommodate in all areas.
Also, just to touch on as well, early payout options that brokers have the option of using with Capify. We've got plenty of scenarios in the past where, for example, a client will come, they only need the money for, let's say, 6 months. We'll still give them that 12-month term. That's not a problem because we don't want to affect their cash flow with their repayments, as mentioned. But they have the option to pay us off earlier, and we'll give them a discount by doing so. Because at the end of the day, we don't rush the client to pay us back. That's not the point of what we do and why we exist. But if they choose to, because their cash flow has increased, they've got those contracts, they've got that money, those invoices paid, that's not a problem at all. We'll reward that client for paying us off earlier. So it's just another solution that we can put on the table. If not, like I said, if they choose to use the whole 12 months on that loan, if that was the case, not a problem at all. Like I said, we don't penalize the clients if they choose to pay us off earlier either.
Of course.
Now, with the preferred industry list, to be frank with you guys, we really work with everyone and anyone to, as you can tell by the list on the screen there. So there is your highly preferred, clients that we see coming through the doors. Pharmacies, I'd say, is one of the biggest. But, when we look at restaurants, bottle shops, butchers, it doesn't really matter. We're willing to work with these guys. We've seen great outcomes in the past. Like I said, at the end of the day, what we focus on at Capify is that responsible lending. And that's why these actual industries have been so successful for us, because we make sure we're giving the right solution and the clients are happy at the end of the day, and so are the brokers. Now, another one as well is construction. We work with construction companies all the time, to be honest with you guys. What we like to see, obviously, is more consistent turnover month to month. But again, taking into consideration what Milad mentioned earlier, when we do consider the COVID period, obviously everyone was affected. So we take that into consideration when providing our loans too. So in regards to the industries that we work with or how we work, like I said, it's just as easy as either email us, call us. We're more than happy to take that call, run through a scenario with you guys over the phone, let you know exactly where we stand on it. The point is, we don't want to waste your time and your client's time by over-promising and under-delivering type of thing. We want to ensure that you guys get the best experience, because at the end of the day, that's the only reason you guys will come back to us if we do our very best and meet your needs and also your clients' needs and find those right solutions. And I'm sure in turn your clients will be happy with all the outcomes and solution that you guys provide as well. So yeah, like I said, we're a phone call away if ever you guys need us.
Awesome. So that's the end of the webinar for us. Now, obviously, there's going to be a few questions. So Danelle,
back to you.
Back to you.
Excellent. And I will change our view to side by side. And if you guys want to stop sharing so everyone can see our lovely mugs on a Thursday.
Long weekend.
That's it. Yeah. And fortunately, Queensland is not in lockdown.
Yes, thank God.
So, yeah, it's awesome. So there'll be lots of people hanging out with their families over Easter, which is great.
Yeah.
So a couple of questions that we've got. One that's come through around refinancing. Is that, are you guys, proactively looking for the refinance, but then keep the broker in the loop, or does the broker need to bring the deal back to you?
In terms of refinancing a current existing loan with us?
Yes, correct.
Okay. Yeah. So if the client wants to, if a broker has a client, obviously that's in our books already. As Milad mentioned earlier, once they hit around 60% of the total payback, we'll be able to provide them a top-up option. That's not a problem. The reason why we do that is because we don't want the client paying interest on interest at the end of the day. We want to make sure that, we're doing the right thing by them providing that solution. If a broker ever does want to bring back a client that perhaps previously had a loan with us, that's not a problem as well. Like I said, the refinancing part is a lot easier, smoother, because we would have those details already on file. And again, we never do anything without the broker's approval, heads up. So yeah, we'll just let the broker know exactly where we stand with their client, to ensure that they're getting the great experience that we can provide.
Excellent. And look, we know too that, quite often the customers will come back directly because now they have a relationship with you. And exactly. I think that's keen for the brokers to understand that with the API we have with you guys, that, even if the broker's unaware that their clients come back to you, that it'll still get triggered and paid through the system. So it's good to understand that that's the case. Good question. The MCA product,
yep.
How easy, and is this also subject to the wholesale pricing, or is this purely for the business loan product?
The wholesale pricing at the moment is just for the business loan product, but it's not to say that things won't change and evolve. Yeah.
Cool.
With the MCA, the way we operate is pretty simple. We've tried to change it up, as Milad mentioned earlier on, and obviously integrate more technology behind it, because it has to be a streamlined process. I remember when we first introduced the MCA, it was a bit of a headache back and forth with clients. But now, like I said, they complete a bank link and we can see, obviously, assess the deal. If they're happy with it, it's just as straightforward as a business loan that we can provide to clients. And again, as Milad mentioned earlier, we always let the brokers know these are your two options. This is what we can provide on a business loan. On an MCA, you know your client better than us sometimes. So have that conversation, see what best suits them and the solution. And yeah, we just need the heads up and we can move forward with it.
Yeah.
Excellent. Now, another question, and I'm pretty sure that you'll be able to cover the answer off, and I'm pretty sure I know it as well, but it's much better when it comes from you, because it is interesting. You guys have often paid commissions on margins as opposed to funded amounts. So is it right now with the new wholesale pricing that this is on the funded amount as opposed to the margin?
Yep. So I'll take that one. So yeah, with the wholesale pricing, it is on the funded amount. We've seen, obviously, it is a lot easier to provide that information to brokers, because I believe majority of the industry does provide commissions based on funded amounts. And obviously, as mentioned earlier on, we're trying to revamp and make sure that we're aligned with the market. So when we do provide commissions, we'll obviously advise brokers based on the whole amount, the funded amount, and what they can from the wholesale rate, they can earn up to 8% of the commission as well.
And from a tech perspective, to be working on funded amount rather than margin is amazing.
A lot easier.
Well played, Team Capify. Much easier. Yeah. Hey, what's the sort of limit that you guys are really capping out at? Because we're seeing a lot more now that the story is important. So especially when you're dealing with a tech platform like ours, where we're trying to connect clients, connect brokers with the right product. We're building out some variances that we're moving forward now, because we know that the story has become important again, as opposed to that old tick box type scenario. So where are you guys sort of maxing out? Where's the stretched, even if we look at a stretched amount, what's the top end dollar value you guys are capping out at now?
So in regards to our typical lend, I think in the industry, you'll find that it's about 90 to 100% of monthly turnover is your average. We can go up to 120% of monthly turnover. So we're willing to, stretch it out as long as, the client it's serviceable for them. As you mentioned, you guys do a fantastic job at Lend. We speak to the brokers. Obviously, you guys provide us all the relevant information, and we do take into consideration consideration what happened with COVID as well when we provide funds. We say it's up to 350,000, but again, like I said, we have a credit team here to make sure that if it warrants it, we will do it, right? So our job is to make sure the broker's happy at the end of the day, and so is the client. So if we can, Milad's job especially is to bang down those doors, get the solutions that we're after. So, it's just that conversation that we need. It's, if a broker ever wants to pick up the phone, have a chat with us, we'll explain exactly what we can do, and we'll break down doors if we have to, just to make sure they're happy as well.
Yeah, and look, I think, we're seeing it across the industry. There's lots more conversations and we cannot encourage that enough through the Lend platform. As I said, we like to see ourselves as that one-stop shop, that can assist brokers, get them in contact with a lot of lenders without having to fill in an application form over and over and over again, because if everyone could write every deal, then no one would be in business, or there'd be one in business, you know what I mean? So we get that, the option for choice, and you guys touched on the different products. But look, what I can really say to our brokers is it's really important to get those bank statements across, and that you guys are very speedy in your turnover. So, put the deal in the system, send it to you guys, and then pick up the phone and say, I've just sent this deal through. I need you to have a look at it. I need an answer. We certainly appreciate that that's more important in the market now than ever before. And that you can, and we encourage our brokers to reach out.
Exactly.
When COVID disappears and is no longer the hot topic, will Capify change the name of the Capify COVID Flex Loan?
I'm sure we will.
I'm sure
what we're trying to do is obviously just adapt to the current market, and hopefully it disappears sooner rather than later. So once it does, I think it will be a burden off everyone's shoulders. But yeah, we'll definitely look to change something. Maybe we can speak to you guys, come up with suggestions. We're happy to take that on board.
Yeah, it's like naming the new zoo animal, right?
Exactly.
Gets forward, and we'll pick the best one.
Absolutely.
Yeah, we're trying to be as agile as possible. When COVID happened, I think it just shook everyone. And we're trying to stay relevant in areas where the COVID flexible loan. It's an interesting one because a few people have asked that question, Danelle. With the name, but for us, it's just to ensure that that there is something there within our space that is helping during this period. So yeah, it is an interesting one, but yeah,
exactly.
Definitely.
It's for clients and brokers to know that if a client was impacted by COVID, and we're assessing their deals, we'll take that on board. So that's the most important part that we just want to get out there, and let everyone know that, we're not going to.
From a Queensland point of view, we've got nothing to whinge about. We've been lucky, but COVID's still, it's still around, and it's still impacting businesses and especially, in the tourism and travel sectors, and 3-day lockdowns, have, a big effect. Nothing like 3 months and 8-week lockdowns, but it's still happening 13 months later. So we're certainly not out of COVID territory yet. But the signs, as you guys mentioned earlier, the signs are strong, the signs are positive. And, as a lot of us predicted, this real rubber band type recovery is what we're seeing. Really from November last year, we sort of started to see things increase, and then,
Definitely.
February and March have been, out of control, which is really promising for everyone out there. A quick question for me. So that's the questions that were in the Q&A section. But a quick question for me is, have you guys considered, I spoke about it yesterday on a webinar I was on, that, it seems to be that Australian spirit of the biggest disruption brings out the most opportunistic people, right? So we've seen a lot of inquiry for purchase an existing business or startup requests. Have you guys got anything on the radar, or is there a way with your existing product at the moment that you can help any of those sort of inquiries?
Look, at this current stage, Danelle, the closest thing we'll have is probably going to be the COVID flexible loan, only because we can assess businesses from 3 months. I don't think we're ready to take that risk factor in terms of a completely new business. There is a a slight area where we can help. So if the owners have purchased an existing business and we can see through, some sort of a continuation, then we're able to help. But from a brand new business, no, unfortunately not at this current stage.
And if you've got someone who already has an existing business and is purchasing another business, so this existing business is still operating, are you able to leverage the cash flow of the existing business to help purchase the new one?
Absolutely, absolutely. So yeah, we can definitely look at funding the existing business to help support those clients that need those and are purchasing new endeavors. Absolutely. It's just also to touch on what Milad was mentioning earlier. A whole brand new startup is a little bit trickier just because we're in the unsecured space. No PPSR, GSA. We don't take the house as collateral either. So the risk factor is a little bit out of our square at the moment. But yeah, I'm sure watch this space in time in the future. Hopefully we've got something.
Yeah, there might be a secure product, who knows? But at this current stage, it is probably safer to say the new existing is going to be a bit hard.
Yeah. No, that's perfect. I'll just give everyone sort of 60 seconds as we wrap up time. But we have addressed all the questions that were in the Q&A. So if anyone has got any more or your question was not answered to what you would like to hear, then
yeah, please.
Yeah,
thanks for all the questions.
Yes, throw them at them. Put them on the hot seat.
But you're absolutely right in terms of the Aussie Spirit. We've seen that more so than ever, right? So I'm sure you've seen that through the Lend platform. Brokers have, been using you guys like crazy. But just that Aussie Spirit of getting back to where we were before, and thankfully, if we compare Australia to a lot of other countries around the world, we're doing a great job at this current moment. And touch wood, it continues and even gets better. So I think that Aussie Spirit of just trying to help each other out. People are spending again. It's the consumer confidence. I mean, I'm sure with Uber Eats and those type of technologies, people continued buying stuff. Getting everything sent to their door, and I think that's what helped us get back to the level that we are right now, sooner rather than later. Because if everyone was just looking to save every dollar, it would be a lot tougher for these small businesses in general.
Great, absolutely agreed. Look, as per usual, we really appreciate you guys, one, being back, and secondly, being back with Lend and participating in Lend ED. It's really important, as I said, and most of our brokers, and there's a couple that use us regularly, and there's a couple that are new to Lend today. And all I really want to stress is we encourage that conversation. Lend is here to support that. And if the system isn't giving you the results that you expect or seeing the lender that you want to see, then you need to reach out to us. But, please pick up the phone, talk to Millard, talk to his team. I know Daniel will, fish some calls from time to time as well. So we're really, as I said, it's going back to those old school days where, you used to be able to walk into a bank and have a conversation and that's how your loan was assessed. And we're seeing that that's probably becoming more prevalent in the alternate space at the moment as well. So reach out to the boys, talk to them about your scenarios, and look, all they're really going to say to you is, yes, this is a deal, go and pop it in the Lend platform and we'll do it straight away, or sorry, this one isn't for us. So they're pretty quick in giving you those answers. So boys, anything you'd like to leave the brokers with today?
No, I just want to thank everyone that's participated and joined, and thank the team at Lend. I mean, working with yourself, Georgia, Phil, whenever we need, it's always a pleasure. You guys are very professional, and we really appreciate you inviting us. And we hope our relationship keeps growing. And a special shout out to all the brokers that we're working with too. It's really good to have those relationships, and the ones that use us know exactly what we're talking about, and we're trying our best to always stay honest to our word, because that's very important. I think I talked about it earlier, but with communication and service, I think people are really, not appreciating as much now as they were back in the days. And we're trying to bring that back. When I speak to my father and, when I speak to him about how the service was at the banks 20, 30 years ago, compared to what it is now, and not just within the banks, in every industry, it's sad to see a drop. And I think because businesses are you know, the elastic is pushed to the end when it comes to, you know, ROI and, you know, the profit and loss.
Yeah.
So, you know, they're pushed to ways that, you know, each employee won't be able to spend as much time. But at Capify, we're trying our best to bring that back and stay loyal to that. You know, I would rather have one BDM work with 20 brokers than one BDM work with 50 and then 30 of them unhappy. What's the point of that? You know, we work so hard to bring a broker on, and we want to ensure that they get that service and that, you know, they get that happiness. So yeah, I just wanted to thank you guys and thank those brokers, and, you know, the ones that appreciate it. We're always happy to have that phone call. You know, we'll celebrate the good times and we'll laugh at the bad times.
And hopefully success continues for everyone.
Absolutely.
And everyone enjoy their Easter as well.
Yeah, happy Easter.
Exactly. Happy Easter, boys. And thanks again to our broker family for joining us today. We really appreciate it and appreciate your time. And we're about to jump off and do a Lend ED quick recording on the product with Millard as well. So everything Capify will be updated in the Lend platform, ready for you guys when you get back from your Easter break. And thanks again for joining us for Lend ED.
Thank you, guys.
Thank you, guys. Have a good one.